Hey, hello, Jack Tubbs from the J Team at Realty One in Surprise, Arizona, coming to you today on a warmer but kind of gray and gloomy Monday. Hope you're coming off a weekend that was filled with some rest, relaxation, maybe some fun times with friends and family, a time that gave you some renewal for the week that's coming ahead. Hey, I want to continue on with what I started on Friday, talking about the 5 questions that every home buyer should ask themselves before they start out on a home purchase. And number one was, do I make enough money? And we figured somewhere between 28 and 30% or less after taxes should be what we should be able to put aside for our mortgage payment to make life comfortable and easy, because then we have 70% of our after tax take home to be able to go towards all of our other expenses. Number two was, what kind of down payment do I need? And that really is going to depend on the kind of product that you're going to use. And what I mean by product, what kind of mortgage that you're going to have to finance your home purchase. A higher down payment also is going to carry more weight with sellers. It's going to make your offer carry that much more power over somebody else's, along with a higher earnest money deposit is always going to stand out and above when you write an offer on offer to purchase a home. So what kind of down payment? How much money do I need? Number three, is my credit score high enough? Well, that is really also going to depend upon what kind of mortgage you are going to use to finance your home purchase. With a conventional, you're going to need a higher credit score to qualify for a conventional. And if you want to have a smaller down payment conventional, once again, it's going to be based on a higher credit score. Also, if you want to have a better interest rate, once again, your credit score is going to work towards getting you that lower credit score. Now, I mean a lower interest rate. Now, there are a lot of FHA products out there, even some other products out there that will accept credit scores as low in the mid 600s, low 600s. But once again, you're going to pay higher interest rates, and especially if it's a lower down payment. An FHA that's only 3.5% down, you're going to have to pay PMI through the life of the loan, or until you until you refinance after you have 20% equity or 20% ownership of the home. Then you can refinance and drop that PMI. But your credit score is going to play a very major role in what kind of mortgage you're going to qualify for. And the higher the credit score is going to be, the mortgage that is going to be the most advantageous for you, because you're going to get a lower interest rate and also other benefits that are carried through, say, with the conventional. Home inspections our conventional inspections are a little bit more pulled back or lax than, say, an FHA or a VA inspection. So just realize your credit score is going to play a major role in what kind of mortgage that you are going to qualify for. And what kind of property is right for you as a first-time buyer. I mean, I've worked with a whole bunch of different first-time buyers, and some of them have a husband and wife. They're both working, and the income is very high, no child expenses yet, and they tend to look at homes that really are beyond what they need, but what they're buying for the future, because once they start having children, they know that they're going to have the bedrooms and the bathrooms and the play space for the children as they grow and they get older. So a lot of dual income without children buyers, first-time buyers, will buy a house that's much bigger than their needs, and that's mainly because they have the income coming in, they have the down payment saved up, and they know that they're not going to have a lot of their income being set aside for child care expenses or expenses of that sort. So they're also actually able to put more money in their mortgage payments, and then by the time that they're ready to have children, they even refinance. They'll go back to a 30-year mortgage, but they'll drop their payment way down, because they usually go down to one single income, and then they have child care expenses and everything on top of that. But first-time buyers, what do you really need? Does it have to be the 4-bedroom, 3-bath, 3-car garage with a pool on the golf course, 4,000 square foot home, or does it need to be the 2-bedroom, 1-bath on a smaller yard in a slightly less expensive neighborhood, so that you can stay within that 28 to 30% after tax income to be able to make your mortgage payment? And then as we see property values increase, then you can do the step up after you see maybe a 10 or 15% increase in the value of your current home, so that you have that much more equity to put down on the new home, so that maybe you can put down maybe a 10 to 15% or maybe even a 20% down payment to qualify for a conventional mortgage with a lower interest rate and be able to enjoy a bigger home, but maybe close to the same house payment that you're making on that small beginner home. But it all depends on what situation that you're in. If you have two earners that are earning high income with no child care expenses and not a lot of other expenses outside of the home payment, the house payment, then you know what? They can buy whatever they can afford. But keep in mind that once children come and other expenses can tend to build up, they're going to want to make sure that they have that built into their budget to meet those expenses, so they're never either losing ground, dipping into savings, or living paycheck to paycheck. So we want to make sure we get the right property and it fits our current needs. I mean, we can look to the future once again, depending on your financial situation. And the last question, number 5, how long does it usually take to buy a house? Well, here in the state of Arizona, it's amazingly a quick process, a very quick turnaround time. Usually from purchase to closing is somewhere between 24 and 30 days. You might even find some lenders that can do it even in 20 or less days. I haven't seen anybody be able to close one shorter than 18 days. But it's also going to depend on a couple different things. Have you taken the time to not only get pre-qualified, but even have a lender that does what they call a pre-underwriting? In other words, they've already scrutinized every ounce of your income. They've looked at all your debts. They have looked at your job and their job security. They have looked at everything to make sure that you financially qualify for the mortgage that will pay for that home, that will buy that home, and that you'll be able to make those payments, that you have the ability to repay. They've scrutinized it all, that they're happy and they're ready to finance that home as soon as the appraisal comes back. So realize that it can be as short as process as 20 days or less. Average is probably going to be about 30 days. Now, remember, if you have a lease or if you already have a home and that you maybe sold it, but you still haven't moved out yet, you may be paying for some occupancy or paying for some rent at the same time you're making your payment on your new home. It also depends on if the people that sold you your new home are ready to get out, and they'll pay you rent as you're making payments to your mortgage lender. But average is going to be about 30 days for most purchases here in the state of Arizona. Outside the state, it's usually 45 days, some 45 to 60 days. I know we were taking at least 60 days when the CFPB came in and started their new process to make sure that buyers understood what their payment was going to be, make sure that they could understand that they could afford it. Also, they could make sure that no predatory lending was going on, all these things. Well, that process has been streamlined now, and to be able to get the closing disclosure has become a much quicker process. So 45 days outside of the state, but in the state of Arizona, the way that the Arizona Association of Realtors and the state of Arizona have things currently set up, it is usually about a 30-day process from the offer acceptance to closing to recording of the deed. So that kind of answers that question. That kind of gives you an idea of what kind of timeline that you're in once you start house hunting. So you've got to be prepared. If you're moving out of an apartment or a rental home, you know what? Have your stuff packed. Be ready to go, because hopefully if you make an offer, say on like the 27th or 26th of up to your last month, or before your last month of rent, that by the time you close, you've got a few days to get out, vacate, and clean the premises and move into your new home without paying any extra rent, prorated or regular. So the 5 questions: how much money do I need to make to afford a home? Well, the answer should be we shouldn't be paying more than 28 to 30% of our after-tax take-home towards our mortgage payment. What kind of down payment goes? I always advise at least 10%. We can go less than that. Just realize that we run into things like PMI, our private mortgage insurance, above and beyond the payment that we would make for our principal, taxes, and interest on your mortgage. And the PMI is private mortgage insurance, so that ensures you, should you default, that the lender involved is going to get at least 20% of whatever the loan value given back to them by that insurance so that they know that when they go to sell the home, if we've seen a decrease in home values, they should be able to at least break even. Now, if we have a crisis like we did back in 2008, 2009, that changes things because some markets dropped 60%. And even with a PMI, banks still lost money. But in an attempt to make sure that that doesn't happen, we have much stricter lending laws, plus we have much more stricter PMI requirements to make sure that lenders are protected so that they don't lose money should a borrower default. Is my credit score high enough? Once again, that's going to depend on what kind of mortgage you want to get to finance your purchase. And as I would always say, somewhere between 680 and 740 is optimum. Anything over 700 is really awesome. If you can get over 750, you are a rock star. But at least 680, I think, is probably going to qualify you for probably 85-90% of the programs available to most borrowers. What kind of property is right for a first-time buyer? That all depends on what your needs are, what and how you want to plan for your future needs. And how long does it usually take to buy a house? Well, like I said, here in the state of Arizona, it's usually about a 30-day from purchase acceptance to closing and recording of the deed. So these are the 5 questions that you need to ask yourself. Need to know if you're ready and if you can fit that into your time frame with leases and other things that might be involved. And once again, if there's any way that I can help you or if I can answer any questions that this might have brought to mind that I've shared with you today, you can get a hold of me at 248-330-7972. That's 248-330-7972, or you can email me, jack@thejteam, and that's THE, the letter J, TEAM, .house, and Jack is JACK, so that's jack@thejteam.house. You can call the office or talk to any of my team members at 623-252-4061. Hey, this is Jack Tubbs from the J Team at Surprise, Arizona at Realty One, telling you to have a great day. We'll see you tomorrow with some more about what's going on with the Phoenix real estate market. Bye-bye.